the chairperson, Comrade Karim, colleagues from NA and colleagues from NCOP. Let's also welcome our colleagues from National Treasury. I'm not sure if the Deputy Minister is here. If he's in the platform, he's welcome. Colleagues from FIC and stakeholders who are going to make presentations. The media, you are welcome. Welcome officials from the support teams of the two committees of the NA and the NCOP, PBO and legal services and other officials from Parliament who are here in the platform. You are all welcome. The meeting is officially open. Are there apologies? Alan and Kulek?
No apologies from Standing Finance Chair.
From the Select Committee Chair, we got an apology from Ms. Mamarechane and Ms. Mahlangu. She is busy driving. She will be in and out. Thanks, Chair.
Okay, thanks. Then let's move to item 2. The purpose of today's meeting is to conduct public hearings on the draft amendment of Schedules 1, 2, and 3 to the FICA, Act number 38 of 2001, submitted in terms of the Financial Intelligence Center Act. So we, in front of me here, I see there are going to be 3 stakeholders who are going to make submissions or presentations. That's SAICA, Outsurance, and Minerals Council. SAICA, are you ready?
Yes, Chair. Thank you.
Okay, let's give you 15 minutes. I think would be enough.
Thank you. Can I share the presentation? Dear Chair, honourable members of the committee, as mentioned, I'm Juanita Steenekamp and I represent the South African Institute of Chartered Accountants. I appreciate the opportunity to address you today. From our perspective, anti-money laundering is a global concern, hence the creation of the FATF as a global watchdog, and of course its strict enforcement and consequences for not adhering to the recommendations. With regards to the agenda today, we will just lay out our support and then identify and discuss some items where we believe there's a lack of clarity or ambiguity in the legislation. We will just also talk about the compliance costs and any transitional provisions. From our perspective, we support the initiative to curb anti-money laundering, although we express concern that it has been left late with regards to the due date of October 2022, given its importance and consequences. So we believe that it wasn't necessarily given all the required recognition. It was also mentioned by my colleagues from the tax division to the Standing Committee in March 2022. So given the strict deadlines, in our view, collaboration and engagement needs to be swift and cannot be delayed, but we also need to acknowledge that imposing inappropriate requirements may result in more problems than actually solving the FATF's findings and concerns. The FATF's report dated October 2021 mainly referred to high-risk areas, poor data reporting, poor compliance, lack of monitoring and enforcement. And we would therefore require general compliance, specifically from regulated and unregulated service providers. But this, of course, does not bode well for proper compliance because it will rely on voluntary compliance from these unregulated and also regulated service providers. So we would, in this case, require more engagement and consultation. With regards to the lack of clarity or ambiguity that we've identified, we looked at the definition of an accountable institution, and it says that it includes a person who carries on a business of preparing or carrying out a transaction. So our comments are, who is this person? The FIC Act defines a person, and it actually defines a legal person. It says that any person other than a natural person that establishes a business relationship, and then it says it includes a person incorporated as a company, a CC, or a foreign company. But that, of course, is a legal person and not a person that maybe is required in this act. So from our view, there's no definition of this person. Our members, accountants, they perform services in various entities. So they practice in private companies, closed corporations, partnerships. And it would seem that a natural person in this case would be this accountable institution. And there would possibly be a very high number of people that would need to register. And it would include, would be a high number, it should be borne in mind, given the regulatory oversight by the FIC that now needs to register and monitor all these people. Some of the professions that would be scoped in are already regulated, such as auditors, business rescue practitioners, tax practitioners, and in our view, there's no overlap or there's no clearly defined alignment between the regulators on how this will be implemented. So we request further engagement to optimize the current regulatory regime, which may benefit the FIC from both a cost and an efficiency perspective. It must actually also be noted that accountants as such is not regulated. So there would be a detection risk for these accountants not belonging to a professional body and where they might actually fall through the crack and not be picked up. Further questions that we have relate to the carrying on of a business. The schedules talk about a person who carries on a business of preparing or carrying out transactions for a client. And the question arises on when is a person actually carrying on a business? Questions is how many times, and unfortunately, knowing accountants, they will say, but I've done it once or I've done it twice. So where is this magic line where you actually move from being, from just performing it once or twice and actually being in a business? Also questions relating to what if you are in a company or a partnership, you have one natural person that actually performs the service. So how would this compliance obligations be split? So who would be the accountable institution? You would have one natural person in a company, and that person would have to register as an accountable institution and also comply with all the compliance obligations. The schedule also talks about the business of creating a trust arrangement, which there's no definition currently of what the trust arrangement would be, and also talks about the business of preparing for or carrying out transactions relating to the investment, safekeeping, control, or administering of trust property. So some of the questions here would be the monitoring and enforcement of trustees. So the Master's Office at the end of 2018 stated there's 180,000 trusts registered. So this would also increase the FIC's enforcement and monitoring if they now have to enforce or monitor all these trustees. At present, there is a risk that the Master's Office do not verify the data. So there's no confirmation that what is there is actually correct. The further section talks about this. The scope extensions are also very broad and not precise. Some of the new targeted services and service providers would fall under what we would normally colloquially call accountants, the work that they're doing. We request clarity on this requirement. The schedule talks about the creation, operation, or management of a company. Our members, again, in the accounting sphere, they perform accounting services. They would do compilation of annual financial statements, the audit of these financial statements, and tax services. And we request clarity on whether that would be seen as creation, operation, or management. That's it. Then with regard to the cost of compliance, so SMMEs remain a concern globally, and we request some mitigation based on a risk needs to be proposed. For example, for an SME to comply with all these obligations, where they've got 1 or 2 people in the organization, would financially or structurally not be possible. So therefore, for SMMEs, we require or request lesser requirements, maybe some sort of a scalability or other mechanisms such as a transaction value, which could be used to manage the risk. Of course, also the application to a sole practitioner and a large firm just cannot be the same. So there might also be unintended consequences of a spillover to the rest of the firm. Based on the requirements to register an accountable institution, you need to know your services, and these services would now need to be split. So you as a firm or as a sole practitioner would be providing various services, and you need to split out the services that specifically falls under the accountable or the fixed requirements. Our last comment deals with transitional provisions. At present, there was no transitional provisions or period suggested. Accountable institutions that would now be included would need the time to transition, given the scope and the impact, and also the new risk methodology that they need to adopt. The FIC itself would also need time to refine and address their challenges, and we would propose some sort of an additional transitional period be suggested. I think that's the end of my presentation. I think we'd just like to thank the FIC. We have had numerous engagements with them. They have been willing to discuss our proposals and our where we've got questions, and we are looking forward to participate in any further engagements to clarify the application to our members. Thank you.
Thanks, Juanita, for the presentation. Next stakeholder is OUTsurance. Over to you, OUTsurance. 15 minutes.
Thank you, Chair. I really appreciate the opportunity. Greetings to all that are in the meeting. I'm going to try and share my screen. I just want to see it's disabled, unfortunately.
Hi, Keegan. I just made you a co-host, so you can try now.
Okay, thank you so much. Okay, so my name's Keegan Hart. I'm representing the OUTsurance Life Insurance Company Limited. So let me begin. Okay, so as a matter of introduction, on the 20th of July 2022, Parliament published the proposed amendments to Schedules 1, 2 and 3 of the Financial Intelligence Centre Act 38 of 2001, as amended. OUTsurance Life Insurance Company Limited appreciated the opportunity to submit comments in this regard due to the impact that the proposed amendments may have on our industry. Comments were submitted by OUTLife on Friday, 12th August 2022, as requested. So just a little bit of background to our presentation. In early 2020, the Financial Intelligence Centre had originally published proposed amendments to the schedules of the FIC Act.
Keegan, wait. Hello. Keegan,
yes, can you hear me?
From my side, I don't see the presentation.
Do you not see it? Hold on.
Alan,
once.
Can you see it from your side in Kululeko?
No, Chair, I can't. And if I can also just ask Keegan to share his presentation with me, please.
Okay, no, I see what happened here. Sorry, my sincere apologies. Okay, can everybody see it now?
Yes. Okay, you can proceed.
Okay, thank you, members. So let me proceed. So just as a matter of introduction, just very briefly, on 20 July 2022, Parliament published the proposed amendments to Schedules 1, 2 and 3 of the Financial Intelligence Centre Act. OUTsurance Life Insurance Company Limited appreciated the opportunity to submit comments in this regard due to the impact that the proposed amendments may have on our industry. Comments were submitted by OUTLife on Friday, 12 August 2022, as requested. So just a little background from our side. In early 2020, the Financial Intelligence Center had originally published proposed amendments to the schedules of the FEEC Act. Amongst others, it was proposed to significantly amend the definition in terms of Schedule 1, Item 8, that of long-term insurers. The 2020 proposed amendments indicated that a long-term insurance business that provides products with an investment component would be subjected to the compliance obligations imposed by the FEEC Act. Just a little snippet from that was gazetted. So you'll notice over here that in the left-hand column, that was the original definition of a long-term insurance provider in terms of Item 8, and the proposed amendments in 2020 read as follows: a person who carries on life insurance business in the life annuities class, individual investments class, or income drawdown class as described in Table 1 of Schedule 2 to the Insurance Act 2017, or provide rider benefits as defined in the Act relating to these classes, but excludes reinsurance business as defined in the Act. So it was proposed that long-term insurers providing risk products be excluded from the definition of an accountable institution. The FEEC acknowledged that long-term risk products do pose a low risk, and was hence the reason behind the proposed changes then. So our interpretation was the FIC took into account the provisions contained in the Insurance Act of 2017, the withdrawal of Exemption 7, and the risk-based approach as catered for in the FEEC Amendment Act of 2017. With this in mind, the proposal was made for certain classes of insurance which would be regarded as having little or no money laundering or terrorist financing risk should be excluded from the Act. Outlife 2 was of the respectful opinion that the FIC was excluding risk products from the 2020 amendments due to the inherently low risk that these products carry in terms of money laundering, terrorist financing, and proliferation financing risk. Outlife shares the view that long-term insurance policies with an investment component carry a higher risk and had no objections to these products being subject to the FEEC Act. It appears that the original amendments relating to the long-term insurers has been reconsidered in the 2022 amendments, and the definition in terms of Item 8 has only been aligned with the Insurance Act, but in essence remains unchanged. So just to discuss some of our products and the low risk that they pose. So Outlife currently provides risk products in the form of funeral and underwritten life insurance policies. The funeral product entails a monthly premium paid via direct debit order from a South African-based bank account or cash payment limited to the amount owed, which is effected at a ShopRite store kiosk. Those are your Checkers, ShopRite, and USafe stores. Monthly premiums in general are of a very low value, and we do not cater for lump sum payments. Upon risk event, that would be the death of the policyholder, and only if a claim is valid, a payment is made by electronic funds transfer to the listed beneficiary or beneficiaries. In terms of South African legislation, funeral policies are subject to a 100,000 limit. Refunds are very seldom seen with this product. Customer due diligence documents are obtained from the beneficiary, both for the policyholder and the beneficiary, before payment can be made, and payments are always made into a South African-based bank account. In terms of Outlife's underwritten life insurance product, we are of the opinion that this product too carries a very low money laundering, terrorist financing, and proliferation financing risk. Payments are only accepted via direct debit order from a South African-based bank account. Once again, only upon risk event, which is your death, critical illness, disability of the life assured, does the real risk arise. Payment is made via EFT to the listed beneficiary or beneficiaries after investigation and the obtaining of the relevant customer documents. It would not seem logical to make monthly payments into these policies only to have to rely on risk event occurring, which could take decades. So some matters for consideration. Outlife respectfully believes that these low-risk products should not be subjected to the same compliance provisions we see with banking products that have the ability to transact internationally, or investment products that require large payments up front or could be prone to abuse for money laundering, terrorist financing, and proliferation financing activities. The risk products are not complicated in nature and do not allow for the movement of funds through complex channels. The increased compliance cost, especially where the services of third-party vendors are concerned, is not proportionate to the risk. Increased compliance cost results in the increase in product costs, which is ultimately passed on to the consumer. So from a financial inclusion point of view, we would like to we'd like the members to take into account the following. Outlife aims to align strategic objectives to the concept of financial inclusion across all income bands. The 2011 policy paper, A Safer Financial Sector to Serve South Africa Better, setting out government's approach to reforming financial sector regulation to better serve the country and its citizens, highlights financial inclusion as a key policy priority. A simple product, such as our ShopRite funeral offering, has proven to be a popular choice among South Africa's lower income market. Increased product costs may result in many South African citizens failing to afford financial products that would benefit their loved ones in the event of a tragic occurrence. If the cost of these type of products cannot be contained, it will become unaffordable for many individuals and their loved ones who will be impacted negatively should no financial assistance be offered after the happening of such a tragic event. In conclusion, we fully support the objectives of the FEEC Act and requirements it aims to achieve. It is, however, our respectful submission that risk products offered in the long-term insurance space do not pose a high risk, which requires stringent anti-money laundering and counter-financing of terrorism controls and requirements. The above objectives should further be balanced to avoid financial exclusion. For this reason, we would recommend long-term or life insurers be excluded as AIs. However, it would entail that they would still be required to comply with Section 29, that is your suspicious transaction reports and sanction screening requirements. Outlife would respectfully request that the original proposed amendments of 2020 be reconsidered in light of the impact increased compliance obligations we would have on the long-term insurance industry and the people of South Africa. It is our submission that the original proposal made sense in the context of the inherently low risk of these products offerings being utilized as a money laundering vehicle. We appreciate this opportunity and thank all of those who have been involved. Thank you.
Okay, thanks, Keegan from Assurance for your presentation. The next stakeholder is Minerals Council. Over to you.
Good morning, Chair. Good morning, Honourable Ministers and all participants on the call. Let me just quickly share my screen. Chair, can I just check if the presentation is visible?
Yes, it's visible. Can proceed.
Thank you. From a Minerals Council perspective, firstly, my name is Ursula Brown. I represent the Minerals Council, which is an industry advocacy body representing interests of the mining companies. For your information, we represent the majority of companies producing about 90% of South Africa's mineral production and employing about 90% of the employees employed in the mining sector. To start off, Chair, I think it's important to note that the Minerals Council and its members fully support responsible initiatives that combat money laundering, organized crime, and all aspects associated with illicit trade. In this regard, we also fully support compliance with the FAFT standards and note that it is imperative that a grey listing should be avoided. We believe that it will be catastrophic for the South African country as well as the economy if we are grey listed, and I think we share the sentiments endorsed by the previous speakers that should be avoided at all costs. We do, however, have a specific input that we would like to make, and the focus of our submission is limited to the inclusion of the new category of accountable institutions, specifically the non-financial businesses, the high-risk businesses that's listed in item 20 of Schedule 1 of the proposed FIC amendment. In this regard, we do have challenges with regard to the context or contents of the proposed wording, as some of the wording is unclear and lends itself to different interpretations. We would like, from a legal certainty and regulatory certainty perspective, to get clarity, and specific clarity on some of these issues. The first item that we would like to note is, the proposed amendment talks about receiving payments in any form to the value of 100,000 Rand. What we understand specifically from the consultation paper is that the objective of these proposed amendments is to bring the South African anti-money laundering and counter-terrorist counter-terrorist financing legal framework in line with the global standards of FAFT and aligned with what is happening in other global jurisdictions. In this regard, we note that the fourth anti-money laundering directive, as well as the UK regulations that were published in 2007, specifically limits the amount to cash transactions. If you look at the anti-money laundering fourth directive, it talks about amounts received in cash up to 10,000 euros, whereas the United Kingdom regulation talks about 15,000 cash payments of 15,000 euros. We therefore recommend, Chair, that the proposed amendment should be limited to cash transactions. So it is specifically targeted at the mischief that it wants to address. Secondly, from a mining industry perspective, the words high-value goods are defined in the draft amendments as any item that is valued in that business at 100,000 Rand and more. It is not clear to us what is meant by the word item. The FIC paper specifically proposes the inclusion of high-value goods in the list of accountable institutions, but it recognized specifically that certain categories of goods are more vulnerable than others, and it makes reference to specific categories where the risk lie, and this is dealers in precious metals and stones, in other words, jewelers, antiques, collectibles, luxury motors, and the like. If you give the word item its ordinary interpretation, it could conceivably mean any item that is 100,000 Rand or more. And I think this could lead to some absurdity, because if you buy a bicycle, for example, which easily costs 100,000 Rand or more, you would fall within the definition of an accountable institution. So our recommendation in this regard, Chair, is that the word item should be defined, firstly, and secondly, it should be restricted to the goods that pose a high risk of money laundering, as specifically indicated in the consultation paper. Lastly, we note that it is not clear what the word dealer in the proposed amendment refer to. The FIC consultation paper specifically talks about high-value dealers within the retail sector. They've identified that this is specifically the area where the risk lies. We recommend, in light hereof, that the word dealer should be defined as dealers within the retail sector. We also would like to recommend that, it's not clear whether a once-off or an occasional sale of an item to the value of 100,000 or more would be regarded as a dealer. And in light thereof, we would recommend that once-off or occasional transactions in high-value goods should be excluded from the definition. And we propose that high-value goods dealer be defined as any person who is involved in the retail and sale of goods of a high value, aligned with the areas of risk as been identified in the consultation paper. Chair, this is the extent of our presentation, and I thank you for the opportunity to make submissions. Thank you.
Thanks, Mineral Council, for the presentation. Let's move to item 3, interaction by committee members. Committee members, those are the 3 presentations from SAICA, Outsurance Minerals Council, and you have also read documents that have been submitted by other stakeholders. So now is the time to engage the submissions. I see there's Honorable George, Honorable Ryder, Honorable Abram. Dr. George, over to you.
Thank you, Chairperson. Good morning, colleagues, and thanks for the presentations. Look, we all know that FICA doesn't work because, I mean, there is legislation and we're about to be grey listed. So what we have in place isn't working. And I think the fact of the matter is that no matter what laws you make, if there are people that are not going to comply with it or going to engage in illicit cash flows or finance terrorism, then they're going to do that. And that the law must try its best to actually counter that without damaging the economy that we are in. Obviously, we know that there are international obligations as well. But what is clear is that the FICA as it currently stands makes it exceptionally difficult for average person to transact with banks, etc. And they're the low-hanging fruit. That is usually the compliant section of the population. It is the what would you call it, more sophisticated scams and schemes, etc., that are not apprehended, but the general public then needs to pay the price, the inconvenience, etc. So it is a bit of a conundrum that needs to be navigated. Also, the fact that it does in fact cost money. Now, my question to Outsurance is that you mentioned that you know, you would not want to be as part of this, as much of a part of it as the legislation would want you to, because there's a cost factor involved. The cost of compliance, as we know, the banks is pretty high, and that this would then obviously, you know, push up your operational costs, which would then have to obviously be passed on to the consumers, because that's how we know that it works. Have you done any calculations at all as to what you would think would happen in terms of that? So in other words, what would the financial implication actually be? And then, you know, what would it do, in your opinion, then to the consumers? Because those, of course, are the people whose interests mainly that we have to keep our eyes on. Thank you.
If I may respond, Chair, may I respond?
No, wait. Let me first take a question from the members, then we'll invite you to respond.
Thank you, Chair.
Okay, Honorable Ryder.
Good morning, Chairperson. Thank you very much, and thank you to those that came in to give the presentations. I'm going to pick up on a couple of points, and my questions, some of them are directed at Treasury, and fewer of them are directed at the presenters. So I think SAICA made the point that this has come quite late in the game, and that was pretty much the opening statement. And I do think that this has led to a bit of an interesting conundrum that we're sitting with, because you know, between October of last year, when the warnings were received, June of this year, we hadn't seen much activity, and certainly as a committee, we weren't taken on board with the issues of grey listing and the issues that these amendments to the regulations are hoping to deal with. So yeah, I think Treasury has a bit to answer for in terms of just advising us what they were busy with from October to June, because I think the thread through all three presentations, Chairperson, was that this appears to be quite a broad, heavy-handed, knee-jerk type reaction, and perhaps overreaction is even better, because I don't think that sufficient thought has gone into the consequences and the impact that some of these regulations will have, and therefore I'd just like to welcome the opportunity for public participation and to hear stakeholders' inputs, because I think they are quite far-reaching. And I mean, I'm not going to repeat what the various presenters have said, but it does appear to be something of a blunt instrument in almost a last-minute overreaction to, shut the gate and make sure nothing happens. So we've had the similar claims that have come from FICA, from insurance, the retailers through the National Clothing Retail Federation. That was also was a written submission that we received, and the Minerals Council. I do think that nailing down these definitions becomes quite important, and I do think that there's something quite important for Treasury to take note from there. Yeah, and I think that Construction Industry Loan Fund also did a written submission, which gave some similar thought, because there's a strong issue around the risk weighting, or the determining where our risk actually lies. Does the risk lie in someone who's buying a new jacket from Edgar's, or does it lie with one that's doing high value transactions in cash, buying vehicles or cattle or whatever? And I think Minerals Council made this point quite strongly, asking what is the actual intention behind the amendments? Are we actually looking at specifically at shutting down cash transactions, or are we looking at all high value type transactions? And I think that is for Treasury to tell us what the real intention behind the bill is. I must admit, Chair, I was a little disappointed not to see the Banking Association represented here today to unpack their very technical written submission that they submitted. I think that there certainly is room to investigate that substantially, and I think that Dr. George has covered me with the cost of compliance, but I think it hits the hardest in the banking industry now. We went through a large scale effort across all the banks to establish Mzansi accounts to try and ensure that banking became accessible to the unbanked. And I'm just wondering that if the cost of compliance is not going to push financial transactional type accounts, etc., out of the grasp of the people that we really are here to protect, which is our citizens. So I think, Chair, my observation certainly is that there's general acceptance that something needs to be done. We support that something gets done, but we're not sure that these regulations have been carefully thought through enough without considering the time that's been given to them. Thank you, Chair.
Thanks, Honorable Ryder. Honorable Abraham.
Thank you, Chair. Thank you so much. I appreciate the opportunity. Chair, my first comment really is to commend the organizations that have come, and even those that have written in terms of comments on FICA. And I think, Chair, when it comes to SECA, I think, in fact, all of them who have presented seem to be in agreement. And I think as members of the multi-party committee, we just need to appreciate the fact that we are not alone in the fight against the exodus of finances from our country illegally. And therefore, it is appreciated also that the organizations that have just submitted their views are in agreement, though they might seek clarities here and there. I'll talk to just two of them. Outsurance, for example, much as they agree, but they have a point on a different arrangement when it comes to smaller companies. And I listened carefully when I think the presenter referred to how when they have to pay more subsequently, the beneficiaries within Outsurance will also have to pay more. And I think that is an area that we also are interested in, that the public should not be made to suffer more than they are doing currently. And therefore, my question is whether if they talk of a different arrangement in terms of the increased compliance cost, that it be different between the bigger companies and the smaller companies. It's always a good thing that when we have issues to raise against an item, we also have an alternate that we are bringing as well. So I was listening carefully to Outsurance, and I wanted to hear from them what then should be the alternative in this regard. But when it comes to Minerals Council, now also the presentation was really catching and very interesting, but there is a recommendation that they have that the transactions should be limited to cash only. I didn't quite get, Chair, as to the reasoning behind that. Why would the council recommend that transactions be cash only? Thank you so much, Chairperson.
Thanks, Honorable Abraham. Okay, where are we now? Okay, let's go back to the stakeholders to respond to the questions asked by the members. Outshore, Mineral Council.
Thank you, Mr. Chair. May I respond?
Yes, then over to you.
Thank you. In response to Dr. George's question, what are the cost implications that we have seen? So right now, I cannot give you obviously detailed amounts. I can't give you actual figures. What I can say though is the position that we've experienced and the position that we will experience going forward will remain unchanged. So with the 2020 amendments, what we thought was there would be a little bit of breathing room so that your lower risk products wouldn't have to be as, well, I mean, they wouldn't fall into the ambit of the FEEC Act. So what we've seen in terms of costs, we've experienced massive costs in terms of having to implement a PEP screening tool by a third-party vendor. And in addition, in 2019, we implemented a ID verification tool that we do on onboarding. And that is also a very costly exercise because they charge you per check that you do. So these increased costs that we have to pay, and if you're looking at the very low risk products, it's just they don't measure up. And then in response to Mrs. Abrams, what is the alternative that we seek? Well, for the original amendments of 2020 to be applied, so that your long-term products that are purely of a risk nature do not form part of the ambit of the FIC. As I said, if there's a product with which allows for a investment component and lump sum payment, that'll be treated differently. I don't know if that answers your question.
Okay, Keegan. Let's
Thank
move
you.
to our colleagues from Outsurance and SAICA Outsurance Minerals Council. Who's next?
Chair, through you, if I may respond.
Okay, Minerals Council.
With regard to Ms. Abrams' question as to why we request that the amendment be limited to cash transactions, the point that we were making, Chair, is that the objective, as we understood, is for South African anti-money laundering and counter-terrorist financing legal framework to be brought in line with what is happening globally, as well as with the FAF standards. And if you look at the FAF standards, specifically the Anti-Money Laundering Directive 4, as well as the UK regulations, the mischief lies within, the cash transactions. The global standards is specifically limited to payments in cash. It does not include all transactions. And based on that, we're making the recommendation that if we want to be aligned with global standards, deal with the mischief directly and limit it specifically to cash transactions, because there's normally no trace as to where the money is coming from and what is happening to the funds. With electronic funds transfers, there's a paper trail. You can actually assess where the money is coming from, where it's going, and things like that. So that is our response to that specific question. Thank you, Chair.
Thanks, SAICA. Are you there?
Yes, we are here. Thank you. Oh, sorry.
Maybe before you proceed. Okay, SAICA, before you proceed, I heard you saying that indicating the impact that these regulations will have on the SMEs. Can you take us into confidence as to the impact that it will have on the SMEs?
Thank you, Chair. I think just with regards to SME, so we mentioned that we have accountants that practice in these 4 practices. So 1 or 2 man partnerships, sole proprietors. And at present, we have not seen, and in the past we weren't, the FIC regulations or accountable institutions weren't applicable to us. So this would all be new to these SMMEs or these small practitioners. So we're talking about the compliance costs. So when you register with the FIC as an accountable institution, there's certain compliance obligations that you have to complete. And similar, I think, to what our children's mentioned, the onboarding and those type of things that our people, our accountants, have not done in the past. So they will now have to spend money on this onboarding, certain validations of the people, registering with the FIC, reporting certain transactions. So just in terms of that, so our members as accountants already have a code of professional conduct. We talk about no-clause, non-compliance laws and regulations. They're already supposed to report when there's any non-compliance. So there's already that type of obligation. But all this now with regards to FIC would be new and would take time and cost and effort for them to implement. Thank you.
Okay, thanks. Do we have follow-up questions, members? Honorable Ryder.
Thank you very much, Chairperson. Yeah, Mr. Hart mentioned something, and I think perhaps it's just been repeated now. But this onboarding process, where you're required to check and verify information, Mr. Hart, you said they charge us per check. You were talking specifically about ID documents, and I presume the same would go to CIPRO in terms of checking the company registration documents, etc. Can you just confirm who's charging you each time you verify an ID document? Who are you checking it with, and who's initiating that charge?
So basically, it's not an ID document check. What happens is we run the ID number provided by the client, and via the system, the third-party system, which has access to the South African Home Affairs database. So it runs against the South African Home Affairs database, and then it comes back. So either the ID number is valid and the person is listed as alive, or it comes back as the ID number not valid, or the person is listed as deceased. That's how.
Sorry, without starting a dialogue, Chair, I understand that, but who are you paying? Who's charging you per transaction?
We are working with a third-party vendor by the name of Astute.
Are you clarified, Ryder?
Yes, thank you, Chair.
Okay, thanks. Okay, let's move to the next item, which is because I don't see more follow-up hands. Okay. Comrade Karim, are you still there? You want to make comments now or before?
Very much so, Chairperson. No, nothing. It's just perhaps we should, I think you'll agree with this. We spoke about it and I did follow up after our agreement. I contacted the Acting Director General, Ismail Momoniat, and explained to him that what was coming across in sections of media, astonishingly, is that Parliament's holding back the processing of these amendments. And yet, really, we, as Dennis has said, and we've covered this issue, Chairperson. I think Dennis is covering an issue we covered with them on the last day of the sitting of the second quarter of Parliament. On the very last day, we get this bill, and we don't know where from came a proposed report adopting the bill, which has never happened in my knowledge ever since 1994. I've never heard of such a thing, where amendments are presented on a bill and the very same day you vote on it. But we've got beyond that. It's just to make it clear that the failure to process this bill has nothing to do with the committees. It has to do with problems within Treasury, whatever they are. And the Acting Director General said, no, he's very aware of that. He's also seen that, and he's made it very clear that Treasury takes a responsibility for that. But we are where we are, Chairperson. The only thing I have to say on behalf of the NCOP committee is that as soon as the NA, this is the SCOF public hearings with our presence as the rules allow, but here from, you will obviously process the bill clause by clause, and as soon as you vote in the National Assembly and refer it via the Speaker to the House Chair on our side, we assure you, Comrade, that we will process the bill expeditiously given its importance. And perhaps Treasury, in fairness to both committees and all the members here, we did get a briefing in the NCOP last week or the week before about the processes that are pending on an omnibus sort of bill, which will involve various portfolio committees and departments that is meant to come, that's meant to take this process forward. So as I understand it, Chair, and I think you do too, this is only the first tranche of a process that's unfolding. But we on our side as Parliament, we're ready to act on this bill expeditiously. Also, my general comment in respect of the submissions is that everybody's agreeing that we have to do something, and urgently so. But some of the proposals made by the stakeholders, Chairperson, I think have to be taken very seriously. And we look forward to how you process the outcome of those submissions. Thank you very much.
Thanks very much, Comrade Karim, and also for clarifying that if ever there is a delay in processing this matter, it is not from the side of Parliament. Treasury should take responsibility. They were seized with this matter, I think, from 2017, if I'm not mistaken. They are here, they will speak for themselves. So let it be clear to the public that we never had this matter before us. As Comrade Karim has alluded, that in the public domain out there, it was like Parliament is holding on to processing this matter. South Africa will be grey-listed because of Parliament. That's not the case. Let that be cleared, that this matter is coming to us for the first time. And Parliament doesn't take shortcuts in processing matters. This is a matter of public interest, so we have to make sure that we go through the public hearings like we're doing now, and then process the report to Parliament. Let's move now to responses to National Treasury and FIC. We have had the presentations from stakeholders. Can you respond to those presentations or submissions?
Thank you, Chair. I hope you can see me. I was just maybe to start off with, Chair, apologies on behalf of our Director General, who had planned on being part of the meeting and may join momentarily. He's just been caught up in another engagement, but he will attempt to join quite soon. Honourable members, we have with us today colleagues from the Financial Intelligence Centre who will take us through the details of, not the details, but a broad initial responses to the submissions that we've received today. Of course, honourable members, we will have to very carefully consider and respond in a more detailed and appropriate way to both the written submissions and the submissions made today through a table and matrix that we can provide towards the end of the week. But we are, I guess, right now in a position to sketch out some of the broad guiding principles that have informed the approach that you see contained in the bill. What is also, I guess, important to bear in mind, honourable members, is that a significant number of the submissions that you would have received were also received through the Minister's consultation process. And in that process, we addressed both what we believe to be so we responded to them on the substance, and where possible, try to accommodate some of the concerns, but also underlying our overall approach, honourable members, which you'll hear in a slightly more detail, of having an overall risk-based and proportional approach to the issues raised by some of the specific commentators today. So let me hand over to Peter Smith from the FIC to sketch out some of the broad underlying principles in relation to the comments received, with us being able to provide obviously more detailed comments matrix to yourselves by the end of the week. Thank you, Honourable Chair. Peter?
Thank you very much, Bukele. Mr. Chair, with your permission. As Bukele just said, many of the comments in the written submissions and also in today's public submissions referred to arguments for excluding certain categories of business or certain types of transactions or certain types of products from the scope of the FIC Act, by finding ways of narrowing down the ways in which the different items in Schedule 1 are defined, and therefore creating carve-outs from the scope of the FIC Act. Now, our general approach is, just to reinforce what Bukele had said just now, that was formulated through the process of developing these proposed amendments, has been to avoid creating carve-outs and sort of a patchwork of schedule items that we have to weave together in order to establish what the scope of the FIC Act is. If one does that, it becomes very difficult to determine when an institution is an accountable institution and when is it not, because you then have to go and look at all the different carve-outs and interpret and determine by reference to the specific business of that specific institution, whether it falls within one of the carve-outs or not. And when one does that, nobody is quite certain, neither the regulator nor the business is quite certain whether it should comply with the FIC Act or not until it's put to the test and this is taken through enforcement actions and appeals, etc. A second reason for that is that it's very difficult to argue that each and every such exclusion is in an area where there is no money laundering risk, because one cannot exclude areas of business from the scope of this type of legislation if there is any, even low money laundering risk or terror financing risk. It cannot be excluded from the FIC Act, this anti-money laundering legislation. We as authorities in an assessment scenario would have to make an argument that that area that is excluded is subject to no risk. Therefore, we do not have to apply our anti-money laundering framework to that area of business. If there is any risk, then the legislation should be applied, but applied on a risk-sensitive basis. And this is important to bear in mind as one considers the difference between the obligations, the substantive obligations that are contained in the Act, and the schedule that determines the scope of the Act. So it's not to say that once an institution is an accountable institution, it's a one-size-fits-all in terms of the way in which it should comply with its obligations under the FIC Act. And I think that very much comes through also in our response to some of the comments in today's presentations. For instance, in the life insurance or long-term insurance industry, the status quo, the current situation is that no products, no types of insurance business is excluded from the FIC Act. The proposed amendments would bring in a change to that, which would narrow down the scope of the FIC Act compared to the current status quo. And then in those areas, we would have to argue that there's no money laundering risk whatsoever. In the current status quo, though, where we talk about low-risk products, and for instance, the example of funeral products was mentioned. Currently, as we speak, the FIC Act applies to a long-term insurer in respect of that product category. The insurer would have to know who its customer is in very much the same way it would have to do in response to or in compliance with its normal obligations to ensure that it's ensuring it knows who is insured, who the beneficiaries are, etc. So I think just to illustrate that there's a difference between determining the scope of the FIC Act on the basis of risk and determining the level to which an institution complies and the extent that it goes to in respect of its compliance obligations in different risk scenarios and different types of categories and products. It's also important to keep in mind that the type of product is not the only factor that affects risk in compliance with anti-money laundering legislation. There are various factors, including who the customer is, features about the customer itself or himself or herself, features relating to the geographic location of the customer, etc. So one cannot only look at one dimension and consider products, for instance, as the only determining factor to exclude a certain industry from the scope of the legislation. Some of the comments also in the written comments and in today's presentations also touched on on the objectives of these amendments, and I think it also came through in some of the questions from members to the presenters today. Especially around cash transactions and high-value goods dealers. It's important in this respect also to bear in mind that the objective of including high-value goods dealers is not to deal with cash transactions only. It's to deal with businesses that have customers who have the disposable income to buy expensive items. Whether they pay for it in hard cash, in other words, bring bags of notes and coins into the institution to pay for their purchases, or whether they pay for it electronically or by a bank transfer, etc., is not relevant to this discussion. It's the point here is that a person can mobilize a significant amount of funds to purchase items which are otherwise ordinary people who work for a salary would probably finance over 10 or 3 or 4 or 5 years. This has also been the view that's starting to emerge in the global debate. For instance, if one looks at the international standard, the FATF Financial Action Task Force recommendations, there's no reference to limiting transactions by, for instance, precious metals and precious stones dealers to cash transactions only. Those categories of business have to be included wholesale in general in the scope of a country's anti-money laundering legislation. In our case, we're not referencing precious metals and stones dealers by name specifically, but we are capturing them in this broader category of high-value goods dealers, or we're proposing to do so, because we've also seen in our South African experience that when criminals want to fund their lifestyle from proceeds of crime, they are not only going to buy precious metals and stones, they're going to spend those funds on other expensive items as well, cars, houses, and the sort of things that were mentioned in the presentation today. So in all those categories, one would be looking at including businesses in this, and that's really the objective, to understand or to ensure, not to prevent the transactions from happening, but to have some reasonable assurance that when such a transaction is happening, there would be a record of that transaction. Somebody would have taken the time to record the identity of the person, to record the details of the transaction, and to create an audit trail that can be followed during an investigation phase. Just my last general comment. People have often referred to the burden on the banking sector, and especially the level of effort that banks have to go through to comply with the anti-money laundering legislation, especially the FIC Act. And that is very true. And on an 80-20 principle in our South African financial setup, the majority of funds eventually flow into a bank. But the reason why banks struggle to comply with their obligations and why it's costing them such a lot of money to do so is because people are creating more and more layers of transactions to deceive the banks and to avoid the banks from being able to identify who's actually manipulating a relationship with a bank account by using other types of business in the layering process and when they interact with banks. And that's why we have to expand the scope of the FIC Act ever wider to also ensure that that burden is also carried by other types of institutions who may be used to as intermediaries and being interposed in a customer's relationship when they want to move money through our financial system, which will eventually be facilitated by banks. So those are a few general comments. I just want to pick up on one or two specific points that were brought up in the presentations today. The one is on small businesses and small medium-sized enterprises that will now have to comply with the FIC Act. In this respect, we would just want to point out that in the current scope of the FIC Act, it already includes a large number of small businesses. For instance, legal practitioners vary from very large firms, very complex structured firms, to very small firms with 1 or 2 partners. And all of them have to comply with the same obligation, but again, on the basis of how they are affected by the risk and the type of business that they engage in. I think we should not make the mistake to assume that a small business only deals in low-risk customers. That's not necessarily true. So the burden of compliance that an institution needs to take on is a function of the type of business it's in, the type of products and services it chooses to provide, and the type of customers it chooses to deal with. It's not necessarily dependent on the size of the business itself. So for instance, a lawyer that facilitates import-export transactions for institutions in the chemicals industry, for instance, would be dealing with very high-risk transactions, high-risk customers, high-risk geographic locations. The fact that it's a small firm does not make a difference or does not reduce the risk of the business that it's dealing in. And it would then have to structure its compliance in accordance with that. And that same principle would apply across the board with institutions in all the different items that are covered by the FIC Act schedules. I think just to make the final point here, where an institution provides a multitude of services, and some of those are captured by the FIC Act and some of those are not. The institution, for instance, an accountant that occasionally provides estate planning advice and services that go with it, in addition to accounting services, etc., would be considered to be an accountable institution, but its obligations would apply to that area of its business that are captured in the description of the accountable institution item in the Schedule Act. If an accountant provides none of those services, it would not be an accountable institution. So it's not to say that because an accountant is an accountant or because an entity calls itself a particular by a particular profession that it falls within the FIC Act scope. That is dependent on the type of services it provides and the type of customers it takes on when it provides those services. This is all based, and this is a principle that runs throughout the schedule, the whole of Schedule 1, all the items, is that we're looking at applying this to institutions that are in the business of providing these services and products to customers. And in the business of is a phrase that has been interpreted in our law in a number of occasions. It is something that is not done on an exceptional or occasional basis. It's something that's done for profit and contributes to the product suite of a particular type of organization. So I think those are just general comments on some of the written submissions and some of the comments also in today's presentations. And as Vukile had said, we are already working on, we will provide a much more detailed response to the different commentators in a written form in the coming few days. Thank you, Mr. Chair. I will leave it there and we're available to answer further questions if necessary.
Thanks, Mr. Govind. Is there any other one who would like to make a comment from Treasury? Or we are done? That can move to the next item. Okay.
We're done, Chair. Please proceed. Yeah. Thank you.
Okay. Thanks very much. Any member of the committee, before I move to the next item of a way forward, would like to make any comment? Comrade Karim, any comment before we move to way forward and closure?
No, thank you, Chairperson. Thanks so much.
Okay. Okay. Thanks very much, Comrade Karim, colleagues from NCOP and NA. We'll take the process to the next step. That is the committee deliberate on the issues that have been raised by the stakeholders, and also look at the bill itself and the regulations, compile a report to the Parliament, and then hopefully Parliament or NA adopts the report, then it will be referred to our colleagues in the NCOP. We'll take into considerations all the issues that have been raised by stakeholders, so that it should not be like we call for public hearings for the sake of compliance. Stakeholders have raised very critical issues, issues of affordability, that as much as they agree with the compliance to the Act and the regulations, but there are costs involved. So we can't ignore that, so that later it should not be like you disregarded issues like this, access or cost that will come as a result of these regulations. How will it impact on the banking and the insurance sector? Will ordinary or low income people be able to afford the banking and the insurance products? Those are some of the issues that we'll have to consider and make sure that the regulations do not create a burden to the low and the middle income individuals. Yes, so we'll make sure that the regulations are designed with low class and the SMEs in mind. A one man or a one woman practice in the insurance, the chartered accountants or a legal profession. Those are some of the issues that will make sure that we take into considerations when we process the report. And I think Treasury and FIC will be invited when we process the report, so that if ever there are issues that they have to clarify, they will have to assist us with those issues, so that by the time we take the report to the NA, it's a report that is properly processed and take into consideration its consequences. As much as we like to comply with the regulations out there in terms of the international bodies that we are affiliated to, but we will take into considerations the national interests. Thanks very much, Comrade Karim, honorable members, NCOP, NA, stakeholders who have made submissions in a written and oral form, the media, and all the support teams from Parliament. The meeting is adjourned. We will meet again tomorrow to process other business of the committee. Thanks.
Thank you, Chair. Thank you, members.
Recording stopped.
Thank you for including us, Chair.
You're welcome, Raider.